I lost over $2 million in funded capital in the last 7 years, and here are the 6 lessons I learned from it so you don't have to pay for them the way I did. Each mistake was smaller and harder to spot than the last, and by the end, I was losing accounts for reasons nobody talks about. I lost my first challenge account in under a month, and obviously I blamed the market for it. The pairs stopped moving the way they moved in my backtest. That's what I told myself. At this time, my strategy had 12 confirmations. Trend on the higher time frame, structure, big reset, candle close, volume, and a few more, but I don't want to bore you. That felt like the strongest part of the whole system. 12 things have to line up. How does a trade like that lose? Then I sat down to trade live, and by the time all 12 agreed, the move was already gone. So I started taking 9 out of 12 because 9 felt close enough, and I couldn't see what was wrong because every single rule was written down. Nothing on that list said use your judgment, but half of them needed me to decide whether they were true. Was the structure break clear enough? Was the volume high enough? And here is where I learned. A rule you have to decide isn't a rule, it's a question. And when you are answering it with money on the screen, right after a loss, the answer changes. So the 12 confirmations were real. They really did filter the chart down. They just never proved the only thing that mattered. Whether I could execute the strategy consistently with real money on it. So now I knew the strategy had to be simple and fixed. I built exactly that. It got me funded. But 5 weeks later, the account was gone. I cut down to 3 rules. Fixed entry, fixed stop, fixed target, and nothing left anywhere for me to decide. It worked. It passed the challenge in a few weeks. That was the first time I felt like I had actually done it. 2 years of losing, and now there was a 100k FTM of funded account I can trade and make money on. At this time, I used 1% risk per trade. The number everyone uses, the number that sounds safe. But I didn't know what I should check it against. The account was gone in 5 weeks, and this is the part that still gets me. Nothing went wrong. I didn't break a rule. I didn't revenge trade, move a stop, or force a setup. I just took the losing streak my own strategy produces. So the strategy was profitable and the account was still predetermined to die. Both of those were true at the same time, and nobody had ever put them in the same sentence for me. Because the profit target can take you out. Only the max drawdown can. So the risk has to be sized against the worst normal run the strategy produces, not against how quickly you want to get paid, and not against a number you copied from someone else. Then I went back and looked at what the past had actually consisted of. 22 trades. Short stretch where the order of the wins and losses happened to fall my way. Nowhere near enough to say anything meaningful about the strategy, and I had built my entire account on top of it. So I went and got the data. And for the first time, the numbers looked clean. But what happened when I traded them live made no sense. I did it properly. I went back through the charts and backtested 100 trades on the new system. The numbers came back good. A win rate I was happy with, a risk reward I was happy with. And now I had something I had never had before, actual data. So I went into the next account more confident than I had been at any point in 3 years. Then I hit a 7 trade losing streak in my first month. And I did exactly what I had promised myself I would never do again. I decided the data was wrong. 100 trades said this shouldn't happen. It happened, so the backtest had to be broken. And I was half right, which is the worst way to be wrong. Because at 100 trades, your win rate can still swing around plus minus 10%. Run the same strategy across a different 100 trades and you can get a completely different set of numbers. So I worked it out properly. What the streak probabilities actually were at my win rate, not what a losing run felt like, what it actually was. And a 7 trade losing streak with my strategy was close to 50% probability over 100 trades. That finally cured the question of whether that losing streak meant the edge had stopped working. I didn't have to guess anymore. I could calculate the answer. Then a second number showed up, and it changed how I looked at everything. Minimum 200 to 300 trades. That's what it can take to see whether you are actually profitable, even with perfect execution, no rule breaks and nothing skipped. And at 15 to 20 trades a month, collecting that sample takes around 1 to 2 years, which was a pretty big problem because at this time my strategies had a life expectancy of about 4 weeks. And every time I had switched strategies over those 3 years, I had thrown away the sample before it had enough time to answer the question. So I finally knew exactly what a normal losing streak looked like. I thought that meant I would never misread one again. Then I had the best month of my career, and lost the account soon after that. And if you still don't know what a normal losing streak looks like for your own strategy, that's exactly what the 21-day trading reset is built to help you figure out. It helps you measure your edge, find the actual problem keeping you stuck, and know what needs to change before you risk another account for free. So by this point, I had been trading the same system for years. Same rules, same risk. And I finally had a sample long enough to trust. Then in 1 month, I made more than 20%, which was ridiculous. So of course, I withdrew all the profit at the end of it. Then I lost the account a few weeks later. Not on an abnormal losing streak. On one I already knew was completely normal, because by then I could finally calculate exactly what normal looked like. It started with 5 losses from the start. If I hadn't withdrawn the profit, those 5 losses would have taken the account from more than 20% profit to roughly 15%. I would have seen the drawdown and think nothing about it. But after the withdrawal, the exact same 5 losses put the account straight into a big drawdown with nothing about them. The losing stretch continued, and without that caution, the account eventually hit the drawdown limit. And the strangest part was that I had followed the plan perfectly. I hadn't changed the risk, skipped a setup, moved stop or forced a trade. There was no mistake I could point to, and yet the account was gone. For a while, I genuinely couldn't explain how that was possible. Then I saw what my calculations had missed. Payout had reset the balance, but it hadn't reset the strategy's sequence. I had just spent a month running far above the strategy's expected value. The next 5 losses weren't caused by that month, but they were completely normal within the same long-term distribution. So the payout removed the caution from the account, but it didn't remove the variance from the strategy. And once I understood that, I became obsessed with a different problem. One so sneaky that it nearly cost me another funnel account after 4 years as a full-time trader. At this point, I knew more about my strategy than most people know about anything. Sample size, variance, streak profile. So I started using that knowledge to make the strategy better. I pulled up the losing trades, every one of them, one at a time. And I asked what would have stopped each trade from happening. There is always an answer. This one would have been fine with a tighter stop. This one ran almost to the target and reversed, so moved the target. Every time I made a change, I ran the backtest again, and every time the numbers came back better. I was doing exactly what I thought a serious trader was supposed to do. Review the losses, find the cause and remove it. Then I put the strategy live and it stopped working. But I didn't realize it for months because it looked like a normal drawdown. Eventually, I went back through every change I had made to find out where it had gone wrong. Well, every filter I added came from the trade that already happened. The rule worked on that trade because I had built the rule from that trade. And now the filter was also removing winners that happened to resemble the losses I was trying to delete. I was no longer testing the same 300 trades. I was testing what remained after I had removed everything that had ever lost. The improvement was real. Every number in that backtest genuinely got better. It just never proved the strategy had improved. It proved I had fitted it to the chart I had already seen. So I stopped touching it, and I ran the strategy clean for a long time. And that was when I lost the biggest chunk of all of it without doing a single thing wrong. 2 years ago, I just got funded 300k at a new firm, and I was doing everything right. Hadn't changed the strategy or the risk. Then the firm folded. Overnight, no warning, and everything on it went with it. My students had accounts there too. Every loss before this one had given me something I could fix. This one was a company deciding to stop existing. But firms can be much sneakier than that. You go to take a payout and something in a fine print gets applied that you never knew was being measured. A consistency rule, an intraday drawdown calculated in a way nobody mentioned. Then there is the version where nothing dramatic happens at all. You might not even realize it, but they take the edge anyway. I ran the exact same trades across 2 firms at the same time with a trade copier. FTMO finished up at plus 3%, the other firm finished minus 3%. Same trades, 6 percentage points apart. That gap was insane spread, slippage and fills, enough to erase the edge while both accounts looked completely normal. The firm you choose matters as much as the strategy you trade through it. When I look back at all those mistakes, they come down to one conclusion. I was still blowing accounts because I was not as good as I thought I was, even after all these years. And that's the good news for you, because it means making money from trading is possible. You just need more knowledge and experience than you currently have. And the fastest way to get that experience is to stop paying for it with accounts. Most of what took those accounts was sitting in my own trades before it ever cost me anything. There is one exercise that pulls it out in about 10 minutes, and it finds the mistake that keeps repeating before the account has to tell you. So watch this next. You will know exactly which of your own mistakes is costing you and how to build the wall that stops it.